If you're thinking about getting into the insurance sales business and you're wondering how much money an insurance agent can make, then you found the right video. Greetings again, it's David Duford, owner of Duford Insurance Group. I recruit and train agents nationally to sell final expense Medicare and annuities face-to-face and over the phone. If you'd like to learn and investigate more about how my agency may be able to help you in your endeavors to sell insurance successfully, go to davidduford.com/FAQ. So what we're going to be doing today is showing you exactly, based on the math, how much a new insurance agent can expect to make selling insurance products basically around a life product like final expense, term insurance, or mortgage protection. And here's the thing about this video that's going to be different from the other ones that you've seen. This is not a Kool-Aid drinking hype fest. I'm not interested in trying to get you motivated. The purpose of this video is to give you the facts, the logic behind what the numbers actually look like as far as the potential for earning a living in the insurance business, and to give you some perspective and hopefully a little bit of excitement, not based off of hype, but on numbers of what's possible to, I think, ultimately to encourage you, if you like what you see, to get into the insurance business and pursue a career. Because as I've experienced with my career as an agent and then building an agency, it's been one of the best decisions I've ever made in my entire life. And it's something I want to share with you through this process of learning the business. So with all said and done, let's get started. And we're going to show you the math behind what this business looks like and then what is actually possible. Okay, so when you're selling any kind of insurance, in most cases, your ability to earn an income is based off of three things: what commission you earn off of each sale, minus the expenses, or what I call the cost of doing business, so leads, as we'll talk about here in a moment. And then the third and final outcome, which is your net income, what money you keep in your bank account after you deduct the expenses out of the initial commission. There are some other variables that will kind of integrate into this, including chargebacks, as well as the actual commission rate, that do make a huge impact on what your ultimate earning capacity is. But we're going to start with is just the basics, and then I'll kind of talk about these variables and why they're so important after we get the basic math done. So in insurance sales, you sell a policy and then you earn a commission, and that commission dollar amount that goes in your pocket is based off of what's called the annualized premium. In other words, the annualized premium of the policy, in a rough estimate, is 12 months worth of a premium paid by the client. And that number is what we factor the commission rate off of. So for example, if you sell a $1,000 AP plan, annual premium, and your commission rate is 100%, then the dollars that go into your pocket are $1,000, assuming the policy stays on the books the entire year. And of course, your costs of doing business are your lead costs. And what we have found is typically in the final expense mortgage protection or life insurance business, that somewhere between $500 and $750 is the norm for a weekly cost of doing business, no matter if you're doing direct mail leads, digital leads, telemarketed leads, lots of different varieties of leads. But there is going to be some kind of cost of doing business. Very few agents these days are cold calling or doing strictly referrals. So I think it's smart to include the cost in your actual net income expectations. So for the purpose of example, we're going to use final expense, and we're going to take an agent that's doing 20 direct mail leads weekly. The cost of those direct mail leads are going to be, say, around $650. And a good agent should be closing about 4 to 5 policies every week. So we'll say 4.5 policies on average weekly. And the average annual premium for final expense is about $800 in AP. So from there, what we do is we take 800 AP, multiply it by 4.5, the average policies per week, and that arrives at $3,600 in annual premium sold. We're going to take a 100% commission average, and that means we have an average of $3,600 in dollar commission deposited in our bank accounts before expenses. Now, we don't get all of that $3,600 up front. We only get a fraction of that advanced. So we need to take that fraction out that we don't earn on average, because it gives us a better expectation of our cash flow. And in this case, cash flow is what money hits your bank account up front, because with all life insurance sales, you're going to get the percentage later on down the line. In most cases, in months 10, 11, 12 of the policy. In some cases, in months 6 through 12 of the policy. But for our cases, we're going to use a 75% advance. So we have a client who, or a week where we sell $3,600 in AP. we multiply it by 75%, and we have a adjusted first year or cash flow of $2,700. The next thing we do is we want to account for what we call chargebacks. These are people who change their mind, and you don't earn money on those people who lapse after the premiums they paid in. I think it's safe to use 80% will keep their plans, so we're just going to multiply this by 80%. So we have a cash flow kept commission level of $2,160. And finally, we got to deduct the cost of doing business. In this case, it is $650 for our purposes. So we deduct $650 from that number, and we get a cash flow basis of $1,510. That is the cash flow basis of what we can expect. And of course, that number is going to be a little bit higher, probably closer to $2,000 a week when you account for the commission that has not been earned, that was not advanced. So you're looking at closer to an $8,000 a month income off of a basic 20 lead a week campaign where you productively and consistently hit your numbers like we've described. Now, what makes final expense and life insurance products, and even Medicare too as well, when you use one of these kind of lead-based systems, you can scale them up and produce even more results as you achieve success. So for example, a lot of my advanced agents that get traction with a system like what we've described, they scale up their lead order and then eventually can scale up their total commission. So I want to show you what that looks like, because this is what's really motivating, because it can really boost up your commission substantially, is what I have found training agents since 2011 or 2013, is that those people who can keep good numbers with lower leads can scale up higher and then scale up their net income commensurately. Okay, so we go to our example where out of, let's say, 40 leads a week, we now have a person who's writing 9 policies. So that means 9 times 800 in AP. We get 7,200 in annualized premium sold. They're at 100% commission. They get 80% stay on the books. We only get 75% up front. And then we doubled our lead cost, so we got to take out 1,300 instead of 1,650. So our net income is going to be $3,020. And again, that's probably closer to $4,000 when you account for the unearned commissions. So now we're at a point where we're making approximately $15,000 to $16,000 every single month, and which equates to close to around, what's the math? Probably about $170,000, $180,000 net income before taxes are deducted. And that was just a simple example of just doubling your output on leads and thus doubling your production. But you could even triple or even quadruple that if you have the work ethic and tenacity. And that's what makes this business cool, that guys, if you're looking at this business wondering how much you can make, it's beautiful because you're in a position where you can scale up your earning capacity depending upon what your aspirations are. If you're happy with making just the original example of $1,500 a week, great. But if you're not, you want to go higher, the opportunity is absolutely there. Now, some other factors that you need to understand here that these other videos won't tell you because they don't want to poke fun at some of their competition. They don't want to be fully transparent with you, but you need to really consider this doing your due diligence if you seriously look at this business, are the following variables. Number one is commission rate. I use the example of 100% commission rate because in my agency selling final expense, that's about the average. Some actually pay a little bit more, some actually pay a little bit less, but that's about average if you take all the production that you're going to do. But there's a lot of agencies that say they're at 100%, but the way that they present it is that the maximal commission with one product is actually 100%. But then when you look at the commission grids, you have commissions that are 20, 30, even 40 percentage points lower. And what happens is that your average weighted commission levels aren't 100% like you were promised coming in. They're actually closer to 70 or 80%. And if you take an 80% commission instead of 100% commission, you're reducing your overall net income by tens of thousands of dollars a year in many examples, especially as you start to scale up. So when you're looking at an agency and you're wondering how much you can earn, the commission level you're paid is absolutely imperative, especially if you're going to go out there and spend money on leads. You want to make sure your commission level is maximized, truly maximized. Some people say they've got the most aggressive commission levels, but when you compare it to others, you see that's really not the case. So make sure that you assess what commission levels are possible and take that into serious consideration when it comes to choosing the agency you want to partner with to maximize your earning capability as an insurance agent. So the next thing you want to consider is the fall-off rate, what we call first-year persistency as an insurance agent. And all that measures is how many of our clients as a percentage stay on for the first year. Now, if they drop off prematurely, then you don't earn the full commission. You only earn partial commission based off of when they fall off. But the point is the higher your fall off rate is, the less money you keep from the sales you originated, right? Makes sense? So it pays us to keep more of what we sell. So the question you got to ask yourself as a new agent, if you want to earn the most that you can, well, how do I keep the most of what I've earned, right? And so there's two factors here that make a big difference. Again, a lot of agencies don't want to talk about this because it stands in direct opposition to their strategy. They don't talk about this as being important, but it's absolutely vital. And if you don't know this and you go out there and you figure it out after the fact, it can be detrimental because you end up having people dropping plans because they're overpriced, or because they can get a better deal elsewhere. So the first thing is what you sell, okay? So in the insurance business, I operate in my agency and teach my agents to operate as independent agents. And what's an independent agent? An independent agent is an agent that can freely contract with any carriers that they want to. And in the insurance sales business, especially final expense, what we want to do is have multiple options for our clients, because not all carriers are going to give our clients a good deal. Some are better than others. Well, instead of being force-fed to force our client with one deal, we have the option to shop around and give our client the combination of best price and coverage. And if you don't have that option, or if a company pushes you to push one product that's higher priced or has these gimmicks associated with it that don't benefit the client, you're putting yourself as an agent at risk of getting replaced. You're putting yourself at risk as an agent of not selling as much or not giving your client the best value. So what you sell matters, and you want to make sure the agency you're looking at has options that pay well too, because again, some of these agents, the best ones are the overpriced ones from a price perspective as far as what the agent gets paid, but the really good options for the client, the commission level is way lower because they're trying to deter you from being incentivized to sell those other plans, as opposed to pushing a product that's higher priced and not necessarily as good for underwriting. The second thing you need to understand is how you sell. So again, when we sell products, people are on budgets. People don't just buy the plan and then they're not on the hook anymore. They buy the plan and you're on the hook for a year to make sure that that plan stays. It's not what you make, it's what you keep in this business. And you want to make sure everything you sell sticks on the books. And a big component of that is making sure that you're not high pressure when you sell, that you sell in a low-key, question-based way that meets the needs of the client, that the client's drawn into and really is a part of the buying process and not pushed upon. Guys, a lot of agents get into this business thinking they can sling insurance like they sling cars, that they're out of the woods or the difficulty after 3 days. You're on the hook for almost 300 days, 270 days to be exact if you're advanced 9 months or 75% of your commission. So it stands to reason that you need to make sure how you sell is in line with what the client really wants, and it's not something that's going to be pushy or done in a way that's going to disrespect people and then eventually have them cancel on you. So part of asking yourself, well, how much money can I make in this business, does stem from how you're taught to sell. You want to make sure, like what we do at DeFord Insurance Group, you're taught to sell in a low pressure way, that you're taught to listen intently to what the client's desires are, and then to show them options that are easily affordable, that they can fit in their budget, that they're happy with. Because a policy that stays is the policy that pays, and there frankly just isn't any other way to sell insurance other than that. The last factors here that are both, I don't think they're mutually exclusive at all, they both relate very well, is you got to have positive training from a sales perspective and access to high quality leads that give you the best opportunity for sales success. So training is one of the X factors here, ladies and gentlemen. You got to make sure that you actually are involved with an agency that wants to train you on their entire system from A to Z to present and close, whether you're selling over the phone or face-to-face. A lot of agencies just want to throw you to the wolves. They want to give you a script and then get you going without product knowledge development or skill development or the ability to get prepared properly before you go to battle. And to me, this is one of the biggest reasons why the insurance business is so full of turnover, is because there's just not proper training to develop the agent from a sales perspective and certainly from a product perspective. So make sure you work with an agency that takes your development as an agent seriously and isn't obsessed with having you recruit all your friends and family. Second of all is having access to high quality leads. So there's a lot of agencies out there that mass recruit and have access to leads, which are nothing really that much better than a name in a phone book that are cultivated and resold multiple times over, where by the time you talk to them, they've talked to several other agents and many of them have bought or they're just pissed off. And having the wrong kind of leads, the lower quality leads, is going to reduce your mentality, your mindset positivity. Instead, what you need to do is actually work with leads that have been well vetted by other agents that can attest to the quality of those leads. You need to work with leads that are fresh and exclusive, preferably direct mail if you're face-to-face, and if it's over the phone, either a live transfer or a high-quality telemarketing or Facebook lead. And you need to make sure that, again, it's a lead that the agency is not incentivized to sell you because they profit. A lot of agencies out there are not just in the recruiting and sales business, they're also in the lead business. And they make substantial sums of money selling and reselling digital and direct mail leads over and over again, to the point where they get as much money from the sale of those leads as they do from the what we call the overrides of you making a sale and then a small portion going to the agency above. So there you have it. That's my review on what kind of money you can actually make as a new insurance agent. And I just didn't want to talk about hype. I wanted to make sure that you saw the facts, the numbers, and what's possible from buying quality leads in combination with getting quality training, getting quality support, and making sure that you also keep in mind things like the commission levels, the training, how you're taught to train has a direct impact on what policies you sell. And all of these variables make a huge difference in your experience as an agent. And ultimately, your goal, if I may suggest, is to make sure that all of these variables you leverage in your favor. Okay, because a lot of agencies, they may have one of these in your favor and the rest aren't. And everything that you see numerically on the screen gets, in my opinion, drastically reduced, where the opportunity of making the kind of money that's described here is greatly reduced. So if you're looking for an agency that I believe has all of these factors in your favor, that's what we do at DeFord Insurance Group. I highly recommend you check out what we have to offer. You can go to daviddeford.com/FAQ to learn more about my final expense agency. We recruit agents to sell over the phone and face-to-face, and to see if it's a good fit for you. And go to the website and check it out. And in the meantime, guys, hope this helped you out with understanding what's possible in this business. It's an exciting, awesome business if your setup is right from the beginning. Don't be another statistic. Make sure you do your due diligence and find the best agency for you. This is David DeFord checking out. Thanks so much for watching. See ya.